Welcome to JK Shah classes, revision lectures. Yeah, I can say for a very long period you studied for all the papers at intermediate, and many things you studied before your CA foundation result. Means many of you were early bird students. I think majority of you were early bird students. So obviously you have studied everything, but now the time comes, sir, I remember but I don't remember also. So why can't we have a quick revision, or I can say super fast revision of all the things what we studied in our lectures. So my dear students, let us start with revision session with respect to some of the accounting standards. Today I will start accounting standard 4. Myself, Professor Gaurav, and I would have taught many of you in our Zoom sessions. So let us continue with accounting standards in a very fast, quick revision with respect to all the important concepts. I will be dealing with the textbook which we have, which we did in the class, the same textbook. But my dear students, the classwork sums I had discussed with you, or my colleagues would have discussed with you, but homework section questions, past examination questions, some of them which are very important, I will be discussing it now, because in any case classwork section question, the access is already available. You can watch those videos again if you want to go through the classwork section question, but homework section and past exam, many of you might have solved it, many of you might not have solved it. Whatever be the case, let us discuss them over a learning session. So my dear students, the first standard which I would like to discuss with you is accounting standard 4. Generally referred as events occurring after balance sheet date. Of course, contingencies is also there. Events occurring after balance sheet date. This standard is dealing with something which is happening after balance sheet date. Of course, when I say after balance sheet date, means till which date? So, my dear students, say my balance sheet date is 31st March 2021. So, what is the area it is going to capture from 31st March 2021 till what date? So, obviously, books of accounts are approved by appropriate authority. Of course, for company it will be directors. I can say date on which books of accounts are approved by appropriate authority. So, from 31st March till the date on which the books of accounts are approved by appropriate authority, this is the area where this standard will apply. Events which are happening after balance sheet date. Now, these events, my dear students, if you remember, we used to classify it into two parts. And of course, when we talk about events, we are talking about significant events, those events which will affect our decision making, not all events. Yeah, significant events which have an impact on our decision making. These events are classified as adjusting event, and non-adjusting event. Adjusting event and non-adjusting event. Now, as far as adjusting event is concerned, my dear students, what are we supposed to do? For adjusting event, financial statements are to be adjusted, or I can say I have to make changes in my financial statements. That is nothing but my profit and loss and balance sheet. Adjustment is to be made in that financial statements. Non-adjusting event, only disclosure is required. It means we are not supposed to make any changes in the financial statements. We are not supposed to make any changes in the financial statements. What are we supposed to do? Give disclosure. Only disclosure is required. Okay. So now friends, events occurring after balance sheet date, post balance sheet events which happen after the balance sheet date but before the books of accounts are approved by the appropriate authority. So this is the area. This much area only we are going to discuss. Now what is the date on which the financial statements are adjusted? That is important for us. Which date the financial statements are to be adjusted between this period from 31st March. Say for example, the books of accounts are approved on 18th of May 2021. So between 31st March and 18th May 2021, whatever events occur, we are going to discuss with respect to those events. Whatever events happens between 31st March and 18th May, this is what we are going to discuss. Now my dear students, that events can either be adjusting events or that events can be non-adjusting event. What is adjusting events? Financial statements are to be adjusted. You have to make changes in the financial statements. Non-adjusting events, sir, no changes are to be made in financial statements, only disclosure is required. Now your question comes, sir, what is adjusting event? And that is a very important area. What is an adjusting event? Two things can come under an adjusting events. Number one, conditions with respect to the event exist on the balance sheet date. The condition with respect to that event is there on the balance sheet date. Now you will say, sir, what do you mean by this condition? Condition means whether you know it or you don't know it. I am not going into that area. Sir, I was aware that this is going to happen. No, it has nothing to do with that. When we say conditions, it means the scenario, the circumstances with respect to occurrence of that event is existing on the balance sheet date. Let me explain this point with a very small example and then I go for the second area. Like I have sold goods to somebody, a debtor, in the month of February. Money is to be received from the debtor in the month of say April. But before 31st March, there is a crisis at the debtor's place, some problem the debtor is facing and huge financial crisis is going. I sold the goods in February, I have to receive the money in April, but before 31st March, there is some financial problem going on at the debtor's end. Now this financial problem is going on at the debtor's end. Whether I am aware of it or I am not aware of it is not at all important. You might be aware, you might not be aware, but the problem is going on. So on 31st March, don't you think the conditions with respect to the debtor becoming insolvent or debtor will not be able to pay is existing? And finally in the month of April, he doesn't pay, then I will say, okay, today the event has happened, but this event, circumstance, the condition was there on the balance sheet date. But the same example, if I say in the other way, there was no financial problem, means no impact was there on the 31st March date, everything was going well, but say on 5th of April there is a fire and the debtors go down, is gutted, it's over, huge loss, and now the debtor fails to pay. So again there is a bad debt to me, but my dear student, the condition with respect to bad debt did not exist on the balance sheet date. So conditions with respect to the event exist on the balance sheet date. Now the second point, we say the conditions with respect to the event exist on the balance sheet date, then it is adjusting event and we have to adjust our financial statements. Now it is a non-adjusting event, but it impairs my going concern assumption, then it is to be treated as adjusting event. I repeat, a non-adjusting event means what? The condition with respect to that event is not there on the balance sheet date. It is a non-adjusting, like say for example, there is a fire at our premises and our godown is destroyed. It happens on say 6th of April after the balance sheet date. Now my dear students, it is happening on 6th of April after balance sheet date. What do you think so? Do condition exist? Obviously no. But if the fire impact, the severity is such that sir, I will not be able to continue the business, then we say this is a non-adjusting event. We can say non-adjusting event which impairs going concern assumption. Okay. So this is also to be treated as adjusting event, and financial statements are to be adjusted. Okay, my friends, this is the only one pager I can say for events occurring after balance sheet date. Now let us move on to our theory. Okay, adjusting events and non-adjusting event. Okay, they have to be disclosed in the director's report. Done. Non-adjusting event, examples of adjusting and non-adjusting. These all things have been done in our classwork session. So I am not discussing even classwork questions, just some few questions are there which I would like to discuss because they become doubt when you are revising everything. Yeah. State with reasons how the following events would be dealt in the financial statements of Pradeep Limited for the year ended on 31st March 13. An agreement to sell the land on for 30 lakhs to another company was entered into 1st March 2013. The value of the land was 20 lakhs on 31st March. The sale deed was registered on 15th April. Now see my dear, when are you registering the sale deed? 15th April. You are selling the land for how much? Sir, 20 lakhs land is being sold for 30 lakhs. Okay. But don't you think you had already entered into an agreement to sell? It means the condition that there will be a sale was existing on the balance sheet date. I have entered into a contract to sell. So the condition that this sale will happen is already there. It means this is an adjusting event. Now my friends, many a times you find this difficult case, sir, how theory questions are to be attempted. Nothing big, there is no big rocket science there, very simple. Of course, try to use our modules language, the way they answer it, that is the best. But in many circumstances, you would find that language to be difficult. So what you can do is divide your solution into 3 parts. Part number 1, concept. Discuss the concept. Like in this question, the concept is what? What is adjusting event that I have to discuss. Second part, discuss the particular question, the facts of the case. And of course, the last part should be your concluding remarks, because they have asked, what are you supposed to do? So I'll say, we are supposed to adjust the financial statements by derecognizing the land from the books. Remove the land from the books. Derecognize. Remove means derecognize. And recognize profit of 10 lakhs. This is to be done. So this is adjusting event. But now see, look properly. This is where you get confused, hence I am dealing with this question. The negotiations with another company for acquisition of shares or acquisition of the business was started on 2nd February and you invested on 12th February. Now many of you will feel, sir, negotiation is going on. My dear student, negotiation is just a negotiation. Talks. You do talks with thousands of people while doing business. Does it indicate any condition, situation, circumstance that I will be buying the business? No. No circumstances or situation exist that I will be buying the business. So what am I supposed to do? Sir, treat this as non-adjusting event. See, this is the difference between point number 1 and point number 2. In point number 1, there is an agreement, which means a condition is there. I have signed, a contract exists. Whereas in point number 2, there is no contract or any understanding exists. This is a negotiation is going on. Hence, point number 2, negotiations with another company for acquisition of business is a non-adjusting event, whereas point number 1 is an adjusting event. Of course, this question was done in the class also, same thing. This is the answer for both of them. Here it is an adjusting event and the second is a non-adjusting event. Okay friends, so now coming to homework section, one more question which I would like to discuss with you. See, I am not going to discuss all homework and all past because many of them are repetitive. The same concepts have been done in the classwork questions also, of which video recordings are available. I'm only doing those questions which are good for our revision, because here we don't want to spend a lot of time for these accounting standards, what we spend while doing first time study. I hope you have already done that first study and now it is just a revision. Cashier of A1 Limited embezzled cash amounting to 6 lakhs during March 2012. However, same comes to the notice of company management during April 2012 only. Financial statements of company is not yet approved by the board of directors of the company with the provisions of AS4. Contingencies and events occurring after balance sheet date decide whether the embezzlement of cash should be adjusted in the books of accounts for the year ending on 31st March 2012. What is your reply if embezzlement of cash comes to the notice of the company management only after approval of financial statements by the board of directors of the company? Now see, my dear students, what has happened? Don't you think the cashier has embezzled the cash in March 12? It means the condition with respect to the loss is already there on the balance sheet date. I am not aware of that loss. Now what happens? We come to know about the same only during April 2012. Can I say it is nothing but an adjusting event? I need to adjust my financial statements by recognizing the loss, and the balance sheet cash has to be reduced to that much extent. It is an adjusting event as far as point number 1 is concerned, because the theft has happened is there on the balance sheet date 31st March. The condition exists, so it is an adjusting event. But now, if you look at point number 2, my dear, what is happening in point number 2? This part, they are asking us 2 questions. What is happening in point number 2, my dear? In point number 2, it says that the cash is already embezzled. The conditions with respect to embezzlement of cash is already there on 31st March. But we come across that point only after books of accounts have been approved by the appropriate authority. We are not aware of it only. So what should I do? I'll say, sir, the principles of AS4 will not apply to this area, because principle of AS4 is very clear. Events occurring after balance sheet date but before financial statements are approved by the appropriate authority, they are to be classified as adjusting and non-adjusting. This I can say means that the accounting will not be under the AS4. The principles of AS4 will not apply on this area. What will be your reply? Okay. It will apply in the next year. And in next year, it will be considered as prior period item, because error of omission. It will be considered as error of omission. Okay. So, my dear friends, this is the solution to it. As per para 13 of AS4, assets and liabilities should be adjusted for events occurring after balance sheet date that provide additional evidence to assist the estimation of amounts relating to the conditions existing on the balance sheet date. See introduction. Second, though the theft by the cashier of 6 lakhs was deducted after the balance sheet date before the approval of finance, but it is an additional information materially affecting the determination of cash amount relating to the condition existing at the balance sheet date. Therefore, it is necessary to make necessary adjustments in the financial statements of the company for the year ended on 31st March 12 for the recognition of loss amounting to 6 lakhs. If the embezzlement of cash comes to the notice of the company management only after approval of financial statements by the board of directors of the company, then the treatment will be done as per provisions of AS5. That too in the next year, my dear. See, our year is ending on 31st March 12. So, this is 11-12. 11-12, yes, but this will be happening in 12-13. This being an extraordinary item should be disclosed in statement of P&L as a part of profit or loss for the year ending on 31st March 13 next year. The nature of the amount should be separately disclosed on the statement of P&L in the manner that its impact on the current profit or loss can be perceived. Okay, now this is the very simple stuff. Question number 3 we have discussed. Question number 4 from homework section, my dear. NEEL Limited has its corporate office in Mumbai and it sells its product to stockists all over India. On 31st March 13, the company wants to recognize receipt of checks bearing date of 31st March or before as checks in hand by reducing trade receivable. The checks in hand is shown in the balance sheet as an item of cash and cash equivalent. All checks are presented to the bank in the month of April 2013 and are also realized in the same month in normal course after deposit in the bank. State with reasons whether each of the following is an adjusting event and how this fact should be disclosed by the company with reference to a relevant accounting standard. Number 1. Checks are collected by the marketing personnel of the company from stockist on or before 31st March. Check sent by stockist through courier on or before 31st March. Now see friends, the company is getting possession of the check when? After 31st March. But on the check, the date is given what? The check is date is either 31st March or before 31st March. So the question arises, should we recognize these checks in hand? In that they have asked two parts. If the checks have already been collected by the marketing personnel, and number 2, the checks have not been collected by marketing personnel, but our customers have dispatched the check, have sent the check through courier and we haven't received it. These are the 2 points. Obviously, if you look properly, when I talk about AS4, my dear, we talk about significant events which impact our decision making. This is continuance of a transaction. That if I have debtors, debtors will pay me check. Means I will not bring this under the purview of AS4. AS4 means what? Your financial position changes because of that event. Here what is the change in the financial position? Can I say my financial position has remained the same, what it was earlier? Now the change what is there is nothing but what was debtors has become cash and cash equivalent. So we are not basically answering this answer from the perspective of AS4, whether it is adjusting or non-adjusting. But we are answering it from a normal accounting angle, that should this be considered in our books of accounts as checks in hand. My answer to point number 1, that if the checks have been collected by marketing personnel, obviously I have control over the checks. It should be recognized. But if checks have not been collected by marketing personnel but have been sent by courier, then I don't have control over such checks. So these checks have to be recognized as and when they received, because it does not fit under the definition of asset. You don't have control over it. Your marketing personnel have collected, it means they are employee of the entity. So I should recognize. But when the checks have been sent through courier, I don't have control over the checks. So on 31st March, I have that checks should not be recognized with respect to point number 2. Checks collected by marketing personnel is an adjusting event, as the marketing personnel are employees of the company and therefore are representative of the company. Handing over the checks by stockist to the marketing employee discharges the liability of the stockist. Therefore, checks collected by marketing personnel of the company on or before 31st March requires adjustments from stockist account and from trade receivables, even though the checks date on or before 31st March are presented in the bank in the month of April in normal. Hence, collection from checks by marketing personnel is an adjusting event as per AS4. See here, we are using the word adjusting events, but there is no impact on the financial statements. But just for our understanding, we are saying that if you look properly, this should be recorded. Means the checks in hand should be recorded. Changes are to be made in financial statements. Hence, we are using the term adjusting event. But don't take it in that other way. Otherwise, you will say, sir, debtors are paying me money. Should it be treated as adjusting event? I am paying it to creditors. No. It impacts your financial position. That is the per se. Of course, here we will say we are going to recognize checks in hand. Checks bear date 31st March or before are sent by the stockist through courier before 31st March. The second part is presume that checks will be received after 31st March. Collection of checks on 31st March do not represent any condition existing on the balance sheet date. Thus, collection of checks after balance sheet date is a non-adjusting event. Checks are received after balance sheet date should be accounted in the period in which they are received, even though the same may be dated 31st March on or before, as per AS4. Moreover, the collection of checks after balance sheet date does not represent any material change affecting the financial position. So, disclosure in director report is necessary. So, no disclosure is also necessary. Means they are not saying that it will impact our financial position, then don't disclose it also. Yeah, remaining questions are somewhat of similar only. Now see, one more question from November 18, yeah, for discussion purpose. The accounting year of D ended on 31st March, but the accounts were approved on 30th April. On 15th April, the fire occurred in the factory and office premises. The loss of fire is of such a magnitude that it is not possible to expect the enterprise of D to start operations again. Can I say it is a non-adjusting event? It is a non-adjusting event, but the magnitude of this non-adjusting event is such that I will not be able to continue the business. Hence, it will be treated as adjusting event. Yeah. Contingency event occurring after balance sheet date should be adjusting event even if does not reflect any conditions existing on the balance sheet date if the event is such as to indicate that the fundamental accounting assumption of going concern is no longer appropriate. Yeah. So, if you are not a going concern, my dear, I hope you remember as per AS1, we have to prepare our financial statements on liquidation basis if you are not an going concern. Rest, I think this all things like question number 2 we have already done in the classwork part. You can just have a glance over the past question. Okay, one more, the last question I can say, and we will end up the revision part of AS4. Basically, not to be considered for our discussion, but it was there in RTP of May 19th, so I am just discussing this area. The board of directors of Messrs New Graphics in its board meeting held on 18th April 17 considered and approved the audited financial results along with auditor's report for the financial year ending on 31st March 17 and recommended a dividend of 2 per equity share on 2 crore fully paid up equity shares for the year ending on 31st March, and if approved by the members in the forthcoming AGM on 18 June, and the same will be paid to all the eligible shareholders. Now see, dividend is proposed. When the dividend is proposed? 18th April. And of course, the AGM will be there in which it will be declared. Now my dear students, the question arises, should this be treated as adjusting event? Answer is no. Why? So the condition that the entity will give dividend does not exist on the balance sheet date. Hence, you are going to give dividend is not an adjusting event. Proposal should not be considered as an adjusting event. You can just say notes that company has proposed a dividend that can be given under director's report, but it is not an adjusting event. Are not to be recognized as liability because no statutory obligation exists at that point of time. Okay, the fact it pertains will be paid after approval of AGM. This is what you should write. So my dear students, this is a gist of our AS4. Only thing you have to remember, adjusting, non-adjusting. Adjusting, make changes in financial statements. Non-adjusting, only disclosure. Adjusting, if conditions, occurrence of that event, conditions are there on the balance sheet date. The event occurs and you say, okay sir, the condition was there on the balance sheet date. Okay my dear students, so let me end up with accounting standard 4 and start with another accounting standard. Thank you very much.